98.1.
Studio.
Business.
Here we go. Lagos. Good morning. Hump of the week, Wednesday. How are you all? It's Business Express on Smooth 98.1 FM. Rotus here. I am joined by Wede from Afri Invest. Wede, good morning
Good
to you.
morning, Lagos.
Welcome. Good to have you in here with us. Lagos, please, you know the drill. 0809 444 0981. Send in your messages. Also, we are on YouTube streaming. I'm pointing directly at the camera. youtube.com/Smooth 91. We're also on Twitter at Smooth 91 FM. I have to give a shout out to Mr. Charles Okafor. Met him yesterday. Always humbled to meet our listeners that listen to the show. Thank you, sir. All right, whether we begin with year-on-year inflation for January, and the figures came out early yesterday morning. Of course, after the show, because the show came out around 8:30 a.m. What are we seeing? with inflation?
Okay, so the inflation numbers were in line with analyst consensus. We all expected a rise in inflation, obviously due to the border closures. We expected it to be mostly caused by food inflation.
Okay.
So we saw a rise by 12.13% in January, month-on-month increase by 88 basis points, mostly on the back of the border closure. We also saw implementation of new wages in January. We also saw rising insecurity, which affected food production states, and obviously we expect that this rising inflation trend would continue even up until Q2. Even for the rest of the year, we've estimated that the average inflation numbers will be around 13.4%, 13.7%, sorry, as against the 11.4% we saw last year. That's average year-on-year inflation. So factors like the VAT increase from 5% to 7.5%, factors like the border closure, even the low base effect in calculating the year-on-year inflation, also rising insecurity. We expect that all these factors will definitely lead to continued rise in inflation numbers, and even up until beginning of Q2, where we're expecting in April proposed adjustments in the electricity tariffs. And so basically we expect year-on-year inflation to continue to rise. So.
And you said it was mostly driven by food. Yes, I believe food hit what, over 14%.
Yes, about 14.8%. Yes.
And Nigerians generally, if I go by the last household survey that was done by the Bureau of Statistics, I believe majority of spending goes towards food. Does it not? Yes, I think it's food. So this now means that our brothers and sisters out there are going to be feeling the impact of higher prices on what they spend the most money on.
Yes, of course, and we will still continue to see these high prices even as the government is still trying to improve on the agricultural sector. But until we have better storage infrastructure, so that the planting versus harvest season doesn't really have such a large impact on food prices, until we tackle insecurity that would help reduce reduce insecurity in the food producing states, until we also find ways to improve our seedlings and crop productions that would lead to higher output or yield per hectare. We are still definitely going to see the pressure because we demand more than we have the capacity to supply
and produce. What about interest rates? This one also particularly interests me. Interest rates, but the real return on a number of securities. So what example did I give last month? The federal government, fixed income. Go ahead.
Okay, so we will definitely, the negative yield return, the negative effect is even further steepening with the rise in inflation, because ideally you're supposed to have a return that is at least higher, that can compensate you for the rise in general price levels. But that's not the case here. But we still see, because the question I ask myself is, why don't investors now go to riskier assets? Why don't they invest in equities with all this liquidity in the system? But then you cannot disassociate the equities market performance from the economy. I mean, we've seen a recent downgrade by the IMF. We've also seen different. I've also seen that the companies listed on the stock exchange obviously would perform based on the macroeconomic conditions. So people would still prefer to have safer investments
Mm.
in this current macroeconomic space than to go into riskier assets. So despite the negative fixed income yields, we'll still see real return rather. We'll still see people
Taking that negative return.
taking it as they have it, and then we
Take it
also,
like that.
I mean, we also see sometimes we also see alternatives like commercial paper issuances here and there, but
Those ones are too expensive. I saw
still
Dangote's, which one? Dangote,
still
good
single
one.
digit though.
It is,
So
but it's minimum of. I mean, I'm speaking for myself. It's like 5 million. It's not a minimum to enter some of those commercial. I don't have 5 million to
the
invest.
5 million is still considered retail.
Okay, yeah, exactly. That's a good
According
point.
to
Okay, so Benga Kamu here. These inflation figures are gloomy. Is there any light at the end of this endless tunnel? The fact that he called it an endless tunnel suggests that he himself doesn't see any light. Let's talk about the CBN's single digit inflation targets. I believe we can kiss that goodbye. Yes,
I mean,
which was supposed to be at least below.
at least this year with all the things we have on ground, I mean, they're trying to also increase their revenues with the VAT. They're trying to also push growth in the real sector, encourage spending in the economy. So we definitely don't see single digit inflation anytime in the near future.
This year, so that one is gone. So I just think it's very interesting how you can have a single digit inflation target, but then on the other side, federal government is closing the borders and you're there watching it happen, and then they haven't said anything about it, by the way. No updates from them on the single digit inflation target. So interesting stuff there. We continue to see how these things happen. This is from Shegun. What we're always told by economists is that the naira depreciates in value against other currencies because of the fact that importation is higher than exportation. But with the closure of the borders, which spontaneously reduces the importation as claimed, naira fails to appreciate. What's wrong? Does it likewise defy logic rules as other Nigeria's issues do? Rotus, help us ask the analyst to explain it to us. There's still, this is land borders. There's still the
Yes,
ports.
we still have trades going on. We still import more than we export. So
and when it comes to the naira, I have to say, the central bank. Where's reserve? What are reserves now? 37 billion? Yeah.
37
The central bank has essentially just put all their chips on the table, saying that they are going to defend the naira. So, Shegun, that's really where you should be looking as to how much money the central bank has put into defending the currency. That really seems to be the be all and end all policy for them, because it's come at the expense of other things. What else is out there? Okay, so let's now move to, look, we need to, this coronavirus thing. I think it was myself and Aruoture that talked about this thing. Was it last week or 2 weeks ago, and the impact on markets? We are now seeing. You already mentioned it. Let's go into this now. The IMF, what is it? I love their titles, Article 4 or Article 5 memo.
Article 4,
yeah, they came to a...
so what they typically do is they interview policymakers, people in the financial industry, to sort of get a feel of what the direction the country is headed at, and then they release their Article for reports. So in this particular report, they reduced their growth expectations from 2.5% to 2.2%. In light of course, the external challenges that we're facing. Firstly, let's even look at the coronavirus and its impact on our major revenue stream, which is oil. China is the largest demander for oil, so we have over 40% of world demand for oil coming from China, and then the coronavirus will definitely have a negative impact on this demand. And with our budgets pegged at expected income rather pegged at $57 per barrel for oil revenue, we'll definitely see an impact with the falling oil prices that we've already currently experienced. We'll definitely see an impact. We usually have about a 40% performance shortfall in the budget normally. So with this even further declining oil prices that we can expect, we expect a steeper shortfall.
It's not pretty. Joel here, please. What's the current inflation rate? Maybe Joel is just tuning in. Joel, it's 12.13% in January, up from 11.98% in December. whether let me pull out these figures here, because this thing is quite scary. I wonder if there's going to be a big time global downturn as far as the economy is concerned, particularly for Africa. Luckily for us, apparently, China doesn't buy as much of our oil as they used to. So that one has come down. However, we still have a big trading relationship with them. South Sudan, 95% of their exports to China. Angola, 61%. Eritrea, 58%. Democratic Republic of Congo, 45%. I think Angola's exports to China make bulk 61%, but I think 23% or so is contributes to GDP. With this thing could actually get to, I think the latest figures this morning now, deaths have crossed 2,000, and infections are now over 75,000. Yeah, something 75,000 or so. So it's getting, the numbers that continue to be more alarming. I keep asking everybody that comes on it, do you believe the figures coming out of Lagos? Do you guys believe the figures coming out of China? Do you believe the figures? China has a history, I have to say this,
covering things up.
And
I mean, the different conspiracy theories of how the virus even came
about
in the first place. And well, of course, nobody is convinced. We all expect they would definitely bring out, sugar coated numbers.
Yes,
but then this is the numbers we have that we have to work with, right? And even with if the numbers are not actually reflective of the real situation, it's still alarming. So regardless, there's still a lot to fear.
It's quite scary. By the way, if you're interested in investing in gold, fear of corona has now pushed folks to go towards safe havens, and gold has touched 1,600. I was going to say 1,600, 1,600 per ounce. So this is just showing where funds are going to because of the fears of how long this virus is going to keep affecting folks.
Apple also came out to say that they don't expect to meet their March quarter sales forecast because of the coronavirus outbreak, and it will definitely affect their supply chain.
Yes, and that, I think, it knocked down global markets across the spectrum from Asia to
Exactly. So investors will definitely react to news like this, especially because we don't even see like a clear timeline for when maybe the effect of the coronavirus would subside. Because I mean, it's a scary reality.
It's the only funny thing for us here in Africa, because it's not like Ebola or what is it now? What was it? Lassa fever and so on, where we are actually seeing folks being affected directly here. So for us in Africa, we've obviously, if you're not in the finance space where you're looking at how global markets are being affected, this thing is really affecting everyone. I mean, outside of Africa, but luckily for us, we just don't have that many infections, and so when it seems like we're not really seeing it. But ladies and gentlemen out there, I mean, this thing is rocking markets left and right. I mean, it's really quite alarming. Okay, do we look at this notice from? Go ahead.
I mean, so of course, investors will go into safe haven investments, because I mean, the equities market is shaky. China does business with almost
everybody.
Exactly. So
the whole world.
With the supply chain, for Apple to even come out, be scared about their not missing Q1 sales targets is also a signal that if the coronavirus doesn't stop, or if we don't find like a cure or something, that would at least send a positive sentiment to investors, is definitely a serious cause for alarm. And even other fine metals like for producing cars, there's palladium, and a lot of people, it's mostly the Chinese that buy it, but we've seen a spike in the prices despite the coronavirus, because people are just trying to position ahead of the worst case scenario.
Now, okay, what do we do? Do we do this real estate notice from the Lagos State government, or the creative industry money that's being disbursed?
I feel the creative industry
money
is definitely like a positive. It's definitely, positive in quote development, but I feel apart from that, the government has to find ways to sort of measure all these implementations and disbursements, and know like the impact on GDP growth. The creative industry is definitely somewhere to try to develop in the Nigerian economy, because we've seen it blossom in other parts of the world. I think this particular 7 billion disbursement is mostly to encourage local content creators.
Let me actually give folks the headline. So, Lagos, it's the federal government is going to disburse 7 billion naira to 35 firms. So again, they'll get like five each.
Local,
okay,
local
right.
firms to boost local participation in the local industry as against the foreign guys controlling the market.
But the thing is, though, they said most of this is going to be used for equipment, sound equipment, recording equipment,
training
as well. But most of this equipment is going to be coming from overseas anyway. We still, as far as equipment here in Nigeria, that is still something that needs to be developed. But you still have to now talk about power. Let me quickly take a look at some messages. Thank you, Wede. Andy, good morning, folks in Smooth FM. Believe me, the markets will rebound, and that is where the big dogs will cash out. It always happens. It's a cycle. Yinka says, comrades, I think it's time you have to allow this. Inflation in the system determines consumer buying power, so business owners need to have that at the back of their minds, meaning salary increments should be considered as inflation raises the roof. Good point, Yinka. I doubt if they understand this dynamic, so please loud it. All right, Yinka, I have louded it, and Mazino is giving me the air traffic control figures. Real quick, Mazino, this last message from Aldo. Even the reported numbers from China are alarming. If this persists, as Aldo is referring to the coronavirus, oil prices could crash, stock prices could fall, and a global recession could be in on the horizon. Fantastic analysis by your guest, Wede. From AfriInvest, Wede, thank you so much for joining us. Thank you all for your messages. Hey, we'll continue monitoring everything. Business Express, Smooth 98.1 FM. See you all tomorrow.
Business Express.
All right.
I didn't realize it.